JJ the CPA here. Let's go. 5 tips from a CPA in 5 minutes. Realize there's a difference between a tax deduction and a business expense. There could be a business expense, but it's not tax deductible. So when you're looking at what your business is spending money on, you want to break these things out on your financial statements so that you're able to better know what is your net income for tax purposes versus your net income for your business. So entertainment, non-deductible, life insurance, disability income insurance. There's a number of things that you would still maybe want to have your business pay for, but it's not tax deductible. What makes it tax deductible? Hey, before I forget, if one of these tips help you and you're not a subscriber, do me a favor, click it. You know you want to be. Got a lot of good value coming out. CPA in the last 27 years, helping clients in so many different ways. Thanks for watching. All right, hey, 5 tips from the CPA. How do you know if something's tax deductible? It's the number one question I get with new clients. Well, it's this simple. Did you buy it for your business? Yes. Well, then it's tax deductible. If it's ordinary necessary to your business and your intent is for business, then you nailed it. And so if you're buying it for business, you nailed both requirements under Code Section 162. That's all it indicates. Now, to prove your deduction in the event of audit, you must have a receipt. A receipt's not required to take the deduction. The receipt is required to substantiate the deduction. So if you don't have the receipt, you ain't gonna survive audit on that. The other is you have to prove that the business actually paid for it. It may be a legitimate, ordinary, and necessary business expense with intent to obtain it or spend it for business purposes, but if the business didn't pay for it, it's not going to yield a deduction in audit. There you go. How much disability income insurance do you need anyways? Well, guess what? You can't even get what you need, because here's what the companies do. They take your income times 60%. That's the maximum you're going to qualify. Typically, that'd be your wages. If you're a business owner, it'd be your wages plus the net income of your business that flows down to the individual level. Sometimes they'll base it on distributions, but here's the deal. It's 60% of your personal income for you. That's it. When you think about that, that's all you can get. The companies talk to each other. When you start pulling benefits, the companies know. They report it. So there's no way to get multiple and get more than. They coordinate it with the state, Social Security. So here's the deal. You can't even be sold enough disability income insurance. All right, well, it was super windy at the golf course, so I got to do the other 2 post-golf. So one of the most important reports that everybody doesn't seem to either look at or get or produce, there are even tax professionals, EAs and CPAs that for whatever reason don't provide this report to their clients even when they're doing the bookkeeping. There are many business owners that never have even seen this report in the entire time they've owned their business, and it's called the general ledger. The general ledger is the detailed transactions of your business that make up the items on your financial statements. The general ledger will show you all the transactions that make up office supplies. The general ledger will show you every transaction that makes up whatever income expense there is on your financials. Look at the general ledger. Qualified business income deduction. It's the most powerful deduction because it's brand new and it's 20% of your net income from your business that is not taxable. How do you know if you got that deduction? You look on line 10 of your Form 1040 for 2019, and if it's blank, you didn't get that deduction. If you already filed, you should look at your Form 1040, line 10, and see if there's an amount there if you own a business. If you haven't filed yet and you own a business, There should be a number on line 10, and if there's not, you need to ask, because whatever your income is, your net income times 20% is not taxable. It's phenomenal, so don't miss out on it.
You know what it is, man. Hey, we about to crack the CPA code. JJ the CPA, what up?